All right, yeah, so we'll go over the ES and crude. All right, so basically you're just using an hourly and a 5 minute. You can use 2 hour, 3 hour, 4 hour, and 15 minute, or whatever, hourly and a minute chart. Multi-hour, multi-minute, whatever it is, right? So the idea here, and above that is a tape reading chart. Tape reading chart is very, very, very helpful. I can see things in it that that are relevant. All right. So let's just take a look at what happened in crude. You had a breakdown, pullback, and then a break. So this is what happens. Rally, pullback, and then the next rally, and then the market that's the structure of the market in any trend, especially in any trend. Rally, pullback. But sometimes it doesn't pull back; it just keeps on going when it has a lot of momentum. Here you had a pullback one, pullback two, and what the hell is it? On the pullback, what happens? You get changes of behavior, okay? So you just need to know how to trade them. So for example, here you have a rally down and a pullback one, pullback two. So it has the initial pullback right here. The pullback's up here, and then you have a change of behavior. It does an upthrust and then it breaks. So sometimes what happens is you have a change of behavior and it pulls back with an upthrust and then breaks. Other times you have a change of behavior and then it does an upthrust. So you just have to know what you're doing. That's it. All right. So look here, rally, then it goes in pullback position, and you have a change of behavior and it pukes. All right. So that's the structure of the market. And I have found only two types of charts that show structure very, very clearly are the point and figure and the Renko. There's no other chart, especially not candle charts or even wave charts, that show them as clearly, as these two charts. So I can see very clearly rally, pullback, rally, pullback, rally, pullback. Otherwise, it becomes a mess. You can't figure out what's going on. Anyway, so you have rally, pullback, and set this up. But let's say you didn't get this, right? So there was one counter trend trade, and it happened right here. So I'm not crazy about counter trends, but if you know how to trade them, you're good, right? You just need to know how to trade them, and be ready for springs and upthrusts and all of that shit. So here, right, you have the market clearly in a downtrend, but then you notice a base. So I'll show you what's going on. You see over here? There's no selling pressure. All right, there's no selling pressure. Okay, very good. Then you have a base, and remember this: before markup, you have accumulation. Before markdown, you have distribution. It's very, very common sense. Why? Because people make money by accumulating. Large interests accumulate first and then they mark prices up, or they distribute first and then they mark prices down. So where is the accumulation? It's right here. How does the accumulation look? It looks like a range. Sometimes it's a very little range, especially intraday, but for massive moves, you have the traditional big range that you see in a lot of videos and stuff like that. But this right here is the accumulation. This little thing right here is the accumulation. Now I knew this was the accumulation. I knew it was the accumulation because it has the up, down, up, down, up, down, and the volume buildup here. So that volume buildup is the accumulation of orders. Simple as that. All right, and then when they accumulate, boop, break. All right, they break and they're going into markup, and you have 14,000. That's your change of behavior. Now listen to me carefully. This is a counter trend. So when you're doing counter trend, it's just like trend, but counter trend has smaller target and has a lot of shakeouts. So you better know what you're doing. Otherwise you're gonna get fucked. All right. So right here, I know here that there's no volume, there's no selling pressure. I see the accumulation, I see the base, I know there's a breakout. This is the breakout right here. Right here, this spike bar is a breakout. But that's not enough. I want to see also what the market order is doing. You have delta, boom, right there. So follow through. So this is good. So I mean, volume, delta, whatever it is that you use, like everything needs to be aligned, especially for this type of trade, because they can come in and sell this to go lower. All right. So most important thing is this accumulation right here. All right, that, and then the breakout and the follow through and all that, and they take out that high, and they had a volume buildup and blah blah blah. So I know there's a reversal setting up, and it allows you to get in on that opportunity on the pullback, which comes right into that accumulation area, holds, bingo, reversal time. This right here is the result of all the market order and limit order, all of that. They, and then they go up. Right? So again, we don't know how far this is going to go because this is a counter trend move, and as you know, counter trend is a smaller move. It's a smaller move, so it gives a move. The real move was right here, right here. But I don't know what time this was in the morning, and I just. I mean, you could take it after it does the up thrust right here too, but in case you don't want to take it, that's fine as well. Who cares? All right. Especially if you're trading more than one market, you want something more perfect, that's fine. But this was like, okay, missed this, got this. Bingo. All right, so that does it for crude. All right. You could see very clearly, like it's in a downtrend, right? Look at all this shit. Now look at this big blue, right? This big blue is 4.9 times the size of the average volume. 4.9 times the size of the average up volume. Do you think this is normal? Do you think this is a pullback? Of course not. That's 490%, so 4.9 times the size of the average volume on this up wave. This is accumulation into markup. Maybe they're covering their shorts. I don't know. I don't care. But this is way too much volume. And the signature before it is very important. You can. What the fuck did I do? Anyway. Oh God. What is this? I don't even know what this is, but messed something up. Anyway, so this is this here, the lessening of supply, followed by the buying. It's going to go higher. Probability favors upside, and that's all she wrote. Tap and go. All right, now see where the hell what's going to go on. So I want to see how this thing responds, because we have these are some areas. So I mean, it can just break right through. Like it can have a change of behavior and break right here, or it can go higher to the 70. I don't know what the 76.25 area. I want to see how it responds to that magnet. If you see here on these profiles, right? It had a 76.25, and you see the green candle tap right that area, and then it went down. So yeah, the selling, the test, down, retest here. Now it's breaking above that retest, and the question is it going to hold and go to the next level, or is it going to break through and continue lower? So that's what we're waiting for, and we'll capitalize on it, hopefully. All right, so Yeah, I'm seeing it's going to go to 76.25 or break below 75.50 with a change of behavior right here. And that's it. All right, next is, oh my, look at this. Look at this selling, man. Look at this. Sheesh. That's a lot of pressure. This tapering chart, the way I've built it out, is nowhere on the internet. It's based in real Wyckoff, but I just put some signals or indications on it to give an extra layer of clarity by identifying rallies and pullbacks, along with trend, along with high volume boxes. That's it. All right, so the next thing we want to see is, and again, you're going to see this work over and over again, because this is the natural structure of the market, meaning rally, pullback, but it's only visible in certain types of charts. It's not visible in all types of charts, even candle charts, because of the volatility and the up-down movement, because of the time factor. But if you remove the time factor, then you have Renko and point and figure charts, and those two can show clarity of trend and structure. Hint. All right, so where the hell was I? All right, so this one here, you had a rally, you have a pullback, right? You see that beautiful pullback here. I was looking for this thing to go a little bit lower, and I would have nailed this over here. A little bit lower, but damn it, it didn't go a little bit lower. You see, I just needed it. Even here, I would have caught it, but whatever. Anyway, so here you have a rally, you have a base, you have a breakout. Look at this shit. It goes, you have a rally, right? What happens after rally? You have a pullback. What do? You buy. So you got a rally, you got a pullback, right? So we're looking at that pullback. Where is it? Yeah. Here. Look what happened on the pullback. You get to change your behavior. This is the money maker. All right, meaning when you have a rally on a higher time frame, you wait for a pullback. On the pullback, you go to a lower time frame and you look for a change of behavior, meaning smart money is buying the pullback. Bingo. And this is it right here. So I'm looking at this thing, right? And I don't know. I mean, I missed this entry, but I got the crude entry. But this was a money trade. Really easy, really, really easy. But it just didn't retest the way I wanted it to. And that's how come I just went into the other market. Because anyway, you can see this, right? Rally, boom, right there. Change of behavior. And I don't know, it's right here. And then it tested this. I needed it to retest this area. It just gave one pullback. I needed one more retest, and I executed it. But anyway, and then so this is a change of behavior. I'm sorry about all the lines. I have some indicators that automatically do stuff for me sometimes because of all the wiggles in the waves. It just draws too many lines, but can't really do anything about that. Automation isn't perfect, you know. So you got the change of behavior right there. Pulls back, tests, and then flies. And where does it go? Whoop-de-doo. Check it out. Right at the prior distribution area. Taps it perfectly and reverses. Okay, so what are some lessons to learn is, you know, how to use these types of charts. The tape reading chart is a gift. It is not used at all on the internet. But this is what Wyckoff used for day trading. It was side by side his wave chart. You all heard of the Wyckoff wave and all that. That's not the only thing he used. Take a look at Division 2 of the Wyckoff course. He has 5 to 8 studies in the back of that course, focusing specifically on this type of chart called the tape reading chart. And it has massive amount of benefit, from trend to clarity of structure to clarity of support resistance levels to clarity of accumulation and distribution areas. So, and if you can coordinate that, you know, even if you're using the bar chart or candle chart with profiles, you can see how simple it is here. Rally, pull back into high volume area, tap and go, done. All right, take care everybody, bye.